Hey traders, it's Victorio from TRADEPRO Academy, and in today's video what I'm going to be breaking down is finding trend days in the market using auction theory. I'm going to be using a combination of volume profiles, delta, and market profiles to help you understand when the market is most likely going to trend and when you should stop fading it. So whether it's an uptrend or a downtrend, we want to be aware of that so we jump on side of the trend and not get clobbered trying to pick up pennies in front of that steamroller going against that trend. So if you guys are excited about that video, stick around because it's coming up right after this intro. Now, don't forget to hit that subscribe button and drop a like down below, and I'll see you guys soon. Hello everyone. Over the past few weeks, as we've seen in the markets, we have witnessed a lot of trend days, upside, downside, and continuous progression to either one of these sides, right? To the upside, you have just infinite bidding, and we've seen prices just rally continuously. To the downside, we've seen days where we've just seen constant sell, no bottoms in sight. And today, what we're going to be breaking down are many concepts in terms of finding trend days before they happen. Also, right, breaking down how to trade trend days and understanding where the trend will end. So the breakdown of everything trend day is going to be covered in this video using our favorite tools, auction market theory, multiple different profiles, and I'm also going to be showing you how we can follow trends and stay on side with the trend using a footprint chart in terms of actually trading these trends. So I'm going to be breaking down everything in relation to trend days. And first and foremost, we're going to be starting off with what is a trend day. Now, for those that don't know, a trend day is a continued momentum move that happens to the upside or downside. That pretty much spans the majority of the day with very little to no pullbacks. We can see here the last week from July, the week of July 10th, 11th, 12th, right? From Wednesday, we had started our trend day momentum moves. And we look at a very simple tick chart here. This was Wednesday's trading action. The dark blue background is the RTH, regular trading hour session. And this is what a trend day looks like. So a trend day to the upside is a continuous momentum mover where just buyers keep coming in at higher and higher levels, continuously pressing prices to the upside. That just explodes higher and gets everyone upset, right? If they're not on the side of the trend, because a very big factor of trend days is that people are not used to them. Why are not people used to them? Why do they constantly try to fade them? Why do people go counter trend when they see this large expansion? Number one, they're not used to seeing trends because generally speaking, the market moves in a compressive sideways range for about 70 to 80% of the time. So trend days like these happen 20 to 30% of the time. So people aren't necessarily used to seeing them nor trading them. Now, the other thing is people get in their heads from a psychological aspect and keep thinking, well, how much higher could it go? It can't continue possibly any higher, and think they can call the reversal of a trend that easily. So you can see 2 days back to back where trend days transpire on Wednesday, on Thursday, and even on Friday, we had a trend day to the upside that swung higher. So I'm going to be breaking down not only what trend days are, but what are tools that I use to find trend days. So we're going to be breaking down the volume profile, market profile, and delta. I'm also going to be talking about 2 types of trend days: trading the upside expansion or new all-time highs. And I'm going to be talking about bearish moves and bearish trend days through distributions. They are different. They have different characteristics, whether you're trading a trend to the upside or trading a trend to the downside. So I'm going to talk about how to trade both, not just identifying the moves, but also finding where those trends fail. And that's the last thing I'm going to be talking about, finding trend breaks based on auctions. So first and foremost, right, we're going to be diving into the volume profile complex here. We're going to be using multiple different profiles and multiple different profile tools to help us gauge how to actually find trend days. So we're going to be talking about finding trend days to the upside first and foremost, because these have been apparent over the past few weeks, right, fairly aggressively. And it's good to understand when you're trading at new all-time highs what the expectation of trend side movements are. So let's open here. This is the volume profile, and I'm going to explain to you guys what you can see here on this screen. This volume profile is a volume profile complex that has a culmination of the cumulative volume profile on the right-hand side, which shows us a 100-day cumulative profile, and each individual session that's broken down between the regular trading hours and the extended trading hours. The regular trading hours have a darker blue background, while the extended trading hours, or the ETH, have a lighter blue background, so you can differentiate between. Now, each one of these individual sessions is a volume profile that's attached to a market profile, which are two of the tools that we will be using. Now, what I mentioned at the beginning of this video is that the majority of the time the markets move in a range or a compressive period. This compressive period happens generally on average about 80 to 70% of the time in the markets, where prices oscillate from high to low, and create this range. Now, these ranges can be fairly wide. It doesn't have to be something tight. It can be 20, 30 points on the S&P 500 futures, for example. And this creates a balance. Now, markets, right? One important factor is markets move from balance to imbalance to balance. So from balances to balances, that's how markets generally move. And as traders, the highest probability trades that we can find to get some kind of clean expansion and find some kind of clean move that's worth several points is trying to find out where the markets have created an imbalance or are going to create an imbalanced move. So generally speaking, when we see the markets, we're mostly watching as prices trade within a distribution. This is an area that has a very large volume cluster that gets created, and prices very homey here. It feels comfortable. It wants to stay in this balanced area. It wants to stay where all the volume's at. Now, 20 to 30% of the time, price escapes this balanced area and gets imbalanced, and this escapes the compressive zone, turning into an expansion. And when prices get expanded, what happens is if we escape to the top side, there's a plethora of strong-handed buyers that cause this momentum move, and you're going to see a pretty strong push into the upside swing or the downside swing. So as you may have put two and two together, what we're trying to find when we try to look for trend days are compressive areas that create a significant balance in price, just like this one that's trying to get created right now, right? And these can happen pretty much anywhere, and that's why I use a cumulative volume profile. Now, when prices trade in a range and they get compressive for multiple sessions in a row, right? We want to watch how prices on a day-to-day, session-by-session basis actually open every single morning. So the question is, are we going to open inside the compression or outside the compression? Generally speaking, when we have this compressive period that has formed over several sessions, right, maybe weeks, we generally see prices opening into the RTH within this compressive zone. So that's step one. We want to identify where these are. Now, these are also, in most recent times, new all-time highs. We've been trading all-time highs continuously for several weeks now. And how all-time highs can continue, right, very effectively with strong buying is when we get a push to the upside in an expansive period, all-time highs want to create a distribution into their highs, which kind of looks like a bull flag. And this compressive zone eventually breaks higher. We don't want to see all-time high after all-time high after all-time high. This is more so a blow off top. So when we see this rally and then a compressive period, there's most likely going to be some kind of expansion to the upside. But how do we pinpoint that? So when we find any expansion realistically, when we find any compression realistically, we want to note where the top and the bottom of said compression are. So when we find a balance like this, right, we can see that over the past several days from the prior week, we had created this type of distribution somewhere over here. So when we create this distribution, that means that a lot of volume gets traded to create this belly here on the right-hand side. And this is where prices feel very at home. Prices are attracted to large volume and they want to stay in large volume areas. It's also very difficult to break out of a large volume area. And it's also very difficult to break into a large volume area. So one of the main ways that we can find the potential of a trend day is when prices are actually going to reopen on the US session open at the tops or mainly above the tops of the distribution highs. Now we're talking about expansive trend days to the upside. So when we see this kind of characteristic, right, and into this specific distribution that was created, right, this distribution was something more so like this at the time. And one of these days here, on the 9th going into the 10th on Wednesday, prices were about to open right at slightly above the distribution tops. After several attempts, right, higher highs, higher lows within the larger distribution to attempt some kind of expansion. So, rule number one for long side and upside trend days is finding a distribution and seeing if prices are about to open above that distribution compressive period, right? So we can get that cleaner expansion. Now, we can add more flavor to this, right? We can add a little more juice to this and get better confirmation. That's where we bring in delta. Delta is the difference between the traders traded at the ask minus traders traded at the bid. So aggressive market buyers minus aggressive market sellers, that's how I've colored it. So it's the same concept, but now we can see how traders have traded at the tops or the bottoms of the distribution. So keep in mind we're still talking about how to trade the upside expansive trend days. So when I see that price is about to open at a high of a larger distribution or above it, I want to take note of what kind of imbalanced momentum has been created by delta. So in this specific scenario, what we can notice is that there is continuous, very heavy blue aggressive delta at the highs. Now, this is the idea that there is a lot of trading at the ask that's happening where aggressive market buyers are trying to step into price into highs. Now, this generally leads to absorption and a potential reversal to the downside. Now, in this specific example, every single one of these sessions that creates all of this aggressive blue delta at the highs at the ask is slightly higher from the previous day. So there is an uptrend progression of all of this delta that's building up. So generally speaking, at the top of distributions, we generally see a lot of this type of delta that gets created into the highs. Now, one of the caveats about this is that when we see something of the sort, we generally would look for them to actually turn prices down and push lower. Otherwise, the congregation of all of this heavy delta that trades at the ask at the top of a distribution that can't go any lower is going to help the expansion to the upside, along with the idea that we're going to open above or at the top of a distribution. So when I see all of this delta building up, right, higher and higher, creating some kind of just higher highs based on this, I get a little skeptical of the potential for the turning point as sellers are losing ground. Not only that, but in this specific circumstance, we have a lot of at the bid trading on the delta where traders are getting trapped into lows. That's helping cause the momentum shift to the upside. So think of it this way. When we have a lot of traders that are getting aggressive into the highs and they're creating absorption, at one point, if they start moving above that, they're going to get super happy and the buy side is going to explode and there's going to be continuous buying. So if we find an area like that, especially at the top of a compressive zone into a large distribution, when we move above that, right, not only are we moving above a distribution top, we're also moving above the absorption of prior delta that was accumulated, which allows us to find this type of trend day. So not to mention, right, we can look for these expansive zones from the retests of these hugely blue deltas. So when we move above it, right, those are going to be the areas that we're going to be watching to buy into to get into that area. But I'm going to be talking about how to trade a trend day a little later after we talk about trading the trend day to the downside as well. We're actually finding the trend day to the downside as well. So before we jump into the downside here, we have another aspect of pretty much the same thing that happened in 1 week's time. So this was Wednesday, right? We have a lot of positive delta going up here, and we eventually move up. They hold that positive delta and they push to the upside. Okay, great. Now, on Thursday, we have a trend day to the downside. the trend day to the downside in this circumstance, right? We'll talk about that in just a bit, but we have the creation of a move back into this distribution. And then on the overnight leading into Friday, same concept. All of this at the ask trading happens. Massive traders are trapped into these lows at the bottom band of this distribution. We're going to open at the highs of the distribution. So the expansion higher is going to create the trend day that we saw on Friday, and we pinpointed that live. So this is how you dissect and find a trend day to the upside. But to the downside, it's fairly similar realistically, because when we have momentum moves like this, right, when we have a compressive zone and we expand to the downside, right, if we have a lot of negative delta clustered up to the downside, we open below or at the lows and they accept under that area, that's going to create a trend day to the downside. Now, another aspect of it is seeing, because the downside and the upside are different, especially the upside, because if we haven't traded into that area before, it's pretty clear skies ahead. But to the downside, you're most likely, well, there's a 100% chance that you already traded that area before. So when we're looking at trend days to the downside, it's not only trying to escape outside of a distribution, but it's trying to identify an area that has low volume that created that initial move higher. So it's going to be a lot easier for prices to actually fail and drop through that area. Because if we have cumulative distributions that stack up like this, and we're just moving from one distribution to the other, it might not be as clean of a trend day, but it can be a trend day to the downside. Versus if we have a distribution that sits like this, and there's a 30-point gap of volume over here, when we escape, it's going to be a much more specific downside momentum move in that regard. So I can look at this and say, okay, well, we've expanded to the upside in one individual day, right? This is the Wednesday, and a lot of this volume wasn't there. So if I'm looking for the trend continuation, and if I'm looking for a trend continuation, I want to see the bottom bands of these distributions where there's a low volume drops off, because we want to see that area hold realistically and continue to the upside and make new highs. If that can't happen, what happens is we get into an area of medium volume to low volume where we've only realistically traded one day. And if we can't hold this one area where the volume drops off and gets heavy again, right, the final chance for those real buyers, that tells us that the buy side on this day wasn't that strong, and we can easily eat up this volume, which is exactly what happens on this trend day to the downside. Now, again, the trend day on the next day to the upside, we're opening at the top of this distribution, heavy buy deltas we saw. And look at this, right? Very, very thin volume on the Thursday, so it's going to be a very easy move up for those buyers. There's one other aspect in terms of trend days that we can follow on an intraday basis, and that's looking at the market profile a little more. So the market profile can give us a good understanding of whether a trend day can manifest using the IB, the initial balance, the first hour of trading A and B period. So if we split these profiles up, right, and get a better look at them, we've gone way too far. So when we split these profiles up and get a better look at them, we can identify trend days generally with a close of a 30-minute period outside the initial balance. Generally, I like to look at C and D period because they're the first periods after the initial balance. But generally speaking, any period that closes outside of that initial balance after we've had an excess move through it is going to most likely hold that trend. So if we take a look at what happens here on Wednesday, even if we miss the bottom band of the move, we can see that E period close outside of the initial balance, suggesting that there's going to be that trend momentum movement. Now, it's not only that. I like to build confluence. So the first piece of confluence we talked about was the expansion outside of the larger distribution. Check. The second piece of confluence was we're moving above all of that aggressive absorbed delta. Check. Third confluence can be, are we moving outside the IB high and closing above based on a period that's close to the IB? Check. So we can use these principles to help us identify a trend day move. It's very similar to the downside here. We have a key region on the downside that we wanted to hold out realistically. It's somewhere here into this low 80 or so. And right, there's another region a bit lower too. We can mark off this mid 60. So we create, right, the downside break. Everything's good to go. We have the delta as well. And then we look at C period closes outside of the IB low. meaning that we could sell back into the confluence of the distribution ledge and the IB low for that continued move. Everything is good to go. In this sense, right, on Friday, same thing. C period close outside, very extended. It's very, very long of an exit. So we have to be very careful with this, right? We come we come through this low 60 distribution low, we pull back into it, all is good. So we've checked off everything pretty much off the list to give us that confluence. Now, trading the trend days based on bullish and bearish trend days in themselves, there are differences. First, let's talk about the bullish trend day. The bullish trend day generally is a very strong move to the upside with very little to no pullbacks at all to get on side. And when there is a pullback, the trend generally tends to reverse, which is going to be the next topic. How will a trend continue? So when we look at a bullish trend day, one of the best things I found is that we wait for periods of rotation. After a move up, wait for a period of rotation. After a move up, wait for a period of rotation to continue that momentum move. Because realistically, on the way up, you could be creating a lot of areas to trade, right? For example, if we accept into a distribution area, right, on a trend day to the upside, I'd like to see a pullback into that distribution low to continue that momentum to the upside. However, trend days to the upside don't necessarily act like that, right? Their characteristics are just like a slithering snake grinding to the upside. So the best chance you get is trying to find out where prices rotate and get on that trend move. Because most likely on a bullish trend day, if they actually do pull back, this could be the change and break of the trend in itself. Like, let's take a look at this from a structural perspective, right? Generally speaking, on a bullish move like this, the longs leave behind blocks of positive delta that can help on the pullback, but do they ever pull back? It's fairly rare realistically. Let's take a look at what that might look like on a tick chart here on the ES from last Wednesday and Friday as well. So this is the 10th on Wednesday here, and do you see any real pullbacks, right? This is the start of the trend move into these areas, and we get this large expansion of the upside. Do you see any real pullbacks other than, I guess, here towards the end of the day, right? This is actually the end of the day. Sorry, excuse me. This is the end of the day. So that's not even a pullback. But in this period, do you see any real pullbacks? No. So it's going to be very hard. If you're not long down here, where are you going to get in, right? Am I going to get in here? I have to wait for this area to break and retest. Well, that doesn't happen. So what is the solution to this? One of the solutions is looking at the footprint, right? Let's take a look at Friday before we take a look at the footprint as well. Look at Friday here, right? This is Friday, and there's one individual pullback that happens. But if you're not long here, like we were from the live on YouTube, actually, is very difficult because all you see is rotationary area. Okay, here is a pullback. That's great, and it's a little uncharacteristic before this rally higher. So it's very hard to get on these bullish trend day moves if you're not aware of what's going on. So one of the key aspects that I like to look at is the footprint. So let's pull over the footprint and take a look at Wednesday's upside trend day, right? We'll take a look at Wednesday's upside trend day, and we'll also follow along with Friday's upside trend day. So we're going back to July 10th. So July 10th, and we can pinpoint the start of the move of the trend day in itself. So this is the morning session, and we had marked off based on our distribution high around 45, right? That had built up prior positive delta. You can see here on the overnight session as well. So we can expand above 45, area 44. That's the area that I want to see hold on the pullback on the buy. So, okay, great. Now it holds into this area. And if you're not long already, well, where do you get in? So prices start to rally, and we start moving above the distribution high. What we're seeing is a delta footprint here where we're trying to follow along with the big buyers. And you'll notice that there are some large sellers that get trapped. So this is the first initial rotation. Take a look at this candle. It's built up with aggressive at the ask trading. So you have all this positive delta that's building up. This area you'd want to hold with all these imbalances. When you see a footprint that lights up with these imbalances and heavy positive delta, that's the area that wants to hold. So let's wait for a rotation. you rotate, and a lot of people are going to be like, okay, shit, this is the top. Let's start pulling back right now. You want to wait for a double confirmation because you have a lot of positive delta and negative delta. Here, negative delta gets swept up with a massive positive delta candle. This is the area on a rotation that you're going to get long, right? Because when you look at this, if all of this reactive at the bid trading trying to push prices lower was real, the next candle would have offered from these negative deltas. But instead, we sweep back up with a candle that has 2100, right? Net positive delta. So these are the rotations you're trying to fish out. So let's take a look at this. As we continue, massive blue, blue. You have a huge, huge negative delta here that gets rebid. Again, same circumstance. Very, very heavy positive delta over here at 59. Aggressive reoffer pulls back up against this negative delta. That's our cue, right? That's our cue to look for that long momentum on this upside trend day. These shitty little rotations are all you're going to get. One of the best things to understand about a trend day is it's always better to be late on the trend than constantly trying to fade it. You see prices expanding and running higher. They're trading in an imbalanced area after being balanced. It's always, always better to find a late entry than constantly try to fade it. Even if you're late on the trend move, you only get stopped once, and then you can learn your lesson and potentially look for a turning point in the market. Rather than trying to sell every time this thing stalls out, you'll see, especially on the order flow and on the DOM, if they try to sell like this and they rebid like that every time, that's a very bullish DOM. Same circumstance here into these rotations. So prices rally, heavy positive delta over here in these circumstances. Someone tries to reoffer prices here. They pull down, tries to reoffer. Immediate people come in and sweep it up on the bid, get trapped, rebid it. These are your rotations. Try to get long on that move. And the question, some people might be like, okay, well, Vic, what the hell? How do I know when the trend is going to end? Well, that's a good question. The trend is going to end based on a structural reversal in price based on auctions. What does that mean? So trend continuations, they'll continue as long as prices continue through the distributions, which means, right, it means that we have distribution ledges here, right? We have distributions like this. We have a distribution area like this right now, right? Prices are going to continue as long as we leapfrog through these distributions and create delta that's being supported. So just like structural changes based on price action, if we start creating lower highs and we start breaking that structure, that's going to be our change. What I mean by that is, if we have a distribution like this, right, like this, and like this, and then we have another one like this, imagine prices going at the bid and they're trying to buy this market. And we move up from this distribution to the next, right, to the next. That's how the trend generally continues. But at one point, let's say it goes up to here. And it would continue if we hold the top band of this escape distribution. But what if it doesn't? And it breaks back within this distribution, it holds it as a turning point. That is going to be the break of your distribution and the change in structure. So we can look at this clearly from today's session, because today we had a very bullish move. We have the top band of this distribution into an all-time high. We have a key distribution top area here that expands all the way down here with a midpoint area somewhere over here. So prices, they do their thing. We close outside, they rally into these highs, and realistically, from the expansion of the distribution from the prior all-time high, it's expected that prices will want to continue in that regard, right? We would want to hold the top band of this distribution area, so we're in an imbalanced area. If we become balanced again, what happens? Structural shifts and the change of the trend and the break of the uptrend. So eventually today, what happens is we break under like this, and we hold into 57.10 after we offer below it and fail to hold it as support. That's our structural change. That's where the trend to the upside is dead, and we can start looking for the complete opposite of the move, right? This is what I was mentioning earlier on Discord as well, trying to find the top not only at 57.17, right? So trying to pinpoint where that exact top is realistically based on order flow, that's a topic for another day, right? But also mentioning that I like the shorts realistically. I do like the shorts realistically, as long as we can offer under 57.10. Why 57.10? Because 57.10 is the reacceptance of the larger distribution. So we get into balance after a failed high, an excess high based on the market profile. I also mentioned here, realistically, this could be the top at the 17 based on order flow, right, for the downside move. And it really was cemented after we re-accept into the distribution lower. So just keep in mind, if we understand the auctions and how prices move through distributions, if they fail and re-accept into distributions lower, that is your changing structure. So the last thing I want to mention here is the trend days to the downside. There's a difference between trend days to the downside and to the upside. To the upside, trends just generally flow like this. To the downside, however, it's a different type of market participant, and it's a different thing going on in the internals, because markets generally do tend to grind higher. Buying is more aggressive to the upside. Selling is very aggressive to the downside. But at every time, especially into all-time highs, some buyers come in out of the woodwork and hit some stops. So the sell side looks like this typically. And the good thing about the sell side is that it pulls back. So when we have a downside trend, right, whether it was at the end of Friday, whether it was Thursday, or whether it was at the end of today, actually, what we have is when we accept into key distribution areas, there's a very high likelihood that you'll actually pull back into the area after you break it to actually hold it. So those trend days involve finding where big delta imbalances actually sit and trading them, right? So from hold into that 75 area, we have the need to hold this imbalance, right? These imbalances. You can use that as resistance. Once this was created, you use it as resistance, so on and so forth. It's the same concept as today. If I pinpoint where the key distributions are, right, I can look at the 57.10 area, I can look at that 95.96, and I can look at this 80 region, which we haven't necessarily broken yet. But if we move down like this, right, and these acceptances, this is how we can find the entries for the sell side based on the trend they move. So let's take a look at what that looks like on a chart as well. They're doing some decent damage here. And let's take a look at this. So this is today's price action. We get a nice move to the upside on the earlier on session. And then what happens? Remember what we said, 57.10, right? That was the area that we pinpointed. Because we accepted the distribution under that, that's expected to now hold in that balance to break the trend and start a new trend. So they sell. Okay, great. What's the other area? We said 95. Okay, let's break 95 aggressively. This is the break. What happens here? Pull back and we can get our trend, right? That's how you can trade on the downside trend using these distributions. It's a little easier to get on realistically. And when you get those pullbacks, you don't want to be afraid of them, because that's how the downside trends generally shape up. You can use the footprint as well to understand where the order flow comes into play. For example, we get the initial offer through that 57.11 area. Massive sellers come in. We pull back, we sell. Okay, great. Right now we're looking at that 95 area. So we want a clean break, like about 10 points, 8 to 10 points. We haven't seen that yet. Okay, there it is, significant break. So what's going on over here? Well, we have like very hefty sellers into this area as well, into that 94. So let's see what's going on. So they get trapped, right, into these highs. And what happens? This is your sell point. So they'll pull back. So if they break now this 80 area where they bounced off before, right? Look, even on the pullback here, what happens? They get trapped, reoffer several times into 95. That create this most recent down move. Now new lows on day. So if we go down trade like 68, 65, I'm going to be very careful where this imbalanced area on the 80 is, so I can look for the pullback and that trend will continue. But it's at the end of the day, so we'll leave that for another time. So this is how I trade trend days. Find them, trade them to the upside, downside, identify the breaks, and everything to do around trend days. So I really hope you guys enjoyed this video. Let me know what else you want to see, and take these 4 steps with you, right? Try to identify the trend day based on the larger distributions. Use the large cumulative volume profile as well as your delta complex to identify where markets are in balance, right? And identify where the traders are going to get their expansion based on the large distributions and based on imbalances at the key extremes of those distributions. You can use the market profiles on an intraday basis to help you solidify the trends. But keep in mind, when you're trading an upside trend day versus a downside trend day, there is a different approach and different characteristics to go along. The upside trend day, you're most likely going to be buying close to what look like tops. And the downside trend day, you're going to get opportunities to find those pullbacks. So I really hope you guys enjoyed this video, and there's going to be more like this to come. So thank you and take care.